To remain updated with the latest business news, click on the bell icon.
Hello and welcome. You're watching Business Today. I'm Sakshi Batra, and on this show, I have with me a very special guest. Geetu Moza joins in. She's the consulting editor at Business Today Television. Geetu, thank you so much for taking out time for this interaction. I'm sure all the viewers are going to be loving this interaction because it just comes right days ahead of the Big Bang Union budget.
Thank you so much, Sakshi, for inviting me.
All right, so Geetu, all about markets. Markets have been falling terribly, and investors just don't know what is really happening. So help us understand what's really gone wrong with the markets after this 2 years of massive rally that we have seen. What is suddenly, come as a denting of the sentiment that we can see right now? Is it just that perhaps the correction was long overdue, or do you see some fresh hurdles emerging for the Indian markets, and how long can they really stay?
Sakshi, as we all know, that markets from past two have been buoyant, as you just said that, and it was expected that the correction would happen, and it was also expected that the FOMC would move anytime soon. Initially, when we talked about inflation, everybody said it's transitory, it's short-lived, it is not going to stay because it's supply constraint which is causing inflation. But it did not happen like that. Everybody was caught on a wrong foot. So yesterday we had a Fed meeting, Fed outcome, which said that they will be, moving towards the interest rates in March only, which is too soon. I mean, yes. And that is what was discounted by markets, and it's already discounted in the price as of now because market fixes the way ahead when the announcements are made. So yes, it's a bit of correction that was overdue, and yes, inflation is a big concern which is going to unfold going forward. And FOMC, as it has started acting now, and then it will start. It's tapering again in the summer 2022. That is also going to have an impact. But more or less, it's in the price now, Sakshi.
Okay, that should be actually giving some kind of a calming news to all the investors who are just wondering how much lower can the markets go from here. That perhaps most of the worst is actually priced in now, as these comments have come in from the US FOMC as well. But just like one more thing which we are all concerned about and have been witnessing throughout this January is the consistent sell-off by the FIIs. They have been on a selling spree, and with this FOMC meeting and the announcements of rate hikes coming in, we don't know how big a hike will happen. We don't know how many hikes will happen yet. What will it mean for an emerging market like India in terms of the foreign flows now, which have so far in the last 2 years really supported the street?
Sakshi, if you witness from last 6 months, we have been seeing slowly and gradually FIs moving out of the markets, and that's happening. If we talk about the emerging markets as a whole, India is well placed as far as the emerging market basket is concerned, because the kind of outflows that we saw was minimal as compared to the other countries, which saw a huge outflow of FII money moving out. And then this hot money will move out because once the interest rates go high in US, the other central banks will normally follow, and that usually happens. There's a dollar carry forward trade which happens in emerging markets because so much of liquidity was there in the market, and they could borrow at 0% interest rate money from there and invest in emerging markets, and mostly that came into India also. So this will unfold, and this has been unfolding from last 6 months. I don't see much of the FII outflow now happening. Yes, there will be, because we have an interest rate hike, and how much, as you said, nobody knows. And yes, we initially started with 2 hikes in a year. Now we are talking about 4 hikes in a year. So yes, it's going to impact. But gradually, I mean, the India story, domestic story is intact. If this COVID crisis gets over by the middle of this year, then we see India doing better than other emerging markets, and the FII flow will start emerging and coming into country once again. For now, yes, if we talk about Nifty 500, we had 6-quarter low FII stake. 20-quarter low for BFSI that FIIs have exposure to. And now that we talk about, our economic growth being somewhere between 8 and 9%, fingers crossed for next 4 to 5 years, then the FI money has to come back into India.
Right, absolutely. Now we've tackled the US Fed, you've tackled the FII flows, the one and inflation as well. The other concern that is somehow weighing on the sentiments right now is the constant rise in the crude oil prices as well. Even overnight, we've seen the crude oil really touching the $90 a barrel mark. Goldman Sachs has projected $100 per barrel mark as well for the Indian market. And as India as an oil importing nation, that's something that Indian markets also never cheer, the rising of the crude oil prices. So how much more impact can the rising crude oil prices have on the Indian markets?
For now, what reports I read was that crude oil can surge to $100, but $100 is okay. If it goes beyond $100 and we are not able to really cope up, then it might have an impact on India. Short term, I don't see impact, but yes, one impact could come through currency. If dollar strengthens more, and Indian rupee depreciates, then that could have an impact on because we will be paying the import bill with the dollars. So that might be a little hurt. But I don't see crude oil going higher from here, because now we are talking about EV. It may be something to do with the Ukraine crisis that we are facing and the geopolitical tension that's there emerging. But for now, I don't see any a major impact coming on the Indian stock markets and Indian economy in the near term. Yeah, we have to see the future.
Right. So now we've actually tackled most of the negatives that we've been all talking about, but we are heading towards the big event of the year, the budget, which the investors community, economists, policymakers, all of them look up to be perhaps kind of relieve all the sectors of the pain that they have been going through after the pandemic and the different waves that we've been facing. First the second wave, and now the Omicron wave that is currently present as well. We've not seen any pre-budget rally. The sentiments have been down, but can one really pin their hopes on the budget to really fuel the next leg of the rally?
Maybe, Sakshi, maybe, because we have seen a fall of 10% in Nifty from the peak. And it so rarely happens. If you go historically, then if before the budgets the market fall, then you see a rise after the post the budget. So this time you have a 10% because of the combination of the factors. But yes, maybe the budget brings some good news, and the markets really cheer that we can see a rally, but not a sharp upside. But yes, 1 to 2%. Maybe the markets cheer the budget, because we have already seen a fall of 10% as far as the Nifty is concerned, and the broader markets also have seen a fall of 7 to 8%. So I don't expect some big bang announcements from the budget, but yes, some bit of a cheer. Long-term capital gain tax. Whenever the budget is there, we heard that okay, it is going to be hiked from 10 to 15%, and this time also, markets were spooked because of this news doing rounds. But speaking, I don't expect this to happen, because government won't want that before the LIC IPO, which is going to be launched maybe either this fiscal or early next fiscal. So I think a bit of cheer can be expected.
So as I understand from your comments, if there is no negative news, perhaps markets would still be happy. Is that something that you're looking at?
Yes. Yeah. This budget mostly non-event, because from the last 4-5 years, budget has been a non-event. We don't expect any big announcements, because the announcements are initially through the year they have been making announcements. We have everything in place for corporates. So we don't want anything else. I don't know if there are, but most of it is covered.
Right.
One which all of us would be watching as far as the markets are concerned is the fiscal deficit. Gradually, they might look target, which is good for the markets, and market may be happy with the gradual consolidation that we are fiscal is concerned.
Right. So a consolidation roadmap for the fisc is something that the markets will definitely be looking at. If that comes lower than perhaps 6.8% and 6.5%, that is something that the markets will be definitely cheering about as well. But like you also pointed out, that no change onto the long-term capital gains tax, or no increase over there, is something that definitely will cheer the markets. Historically speaking, just to give a sense to all the viewers who've been perhaps approaching the markets and seeing this fall as an opportunity to get into the markets, invest in the markets, to help them understand historically what has been the kind of relation that budget has had with the Indian markets. How have the markets really reacted to the announcements? And can one really time this space and, get something going for their investments?
That happened in old times, Sakshi. Maybe a
Yeah.
decade ago, we used to wait for the budget, and then they were set 4 to 5 stocks in railways that used to, rally before the budget and on budget announcements. And then we had ITC, which used to be always hammered on the budget. But times have gone, and times have changed. I think markets have become quite intelligent, and the participants kind of awareness that people have, investors have right now is different. I don't think. One should really place bets on budget
Okay.
as such. So historically, if we talk about, I was just going through one of the reports which said between 2013 and 2021, it is just markets have rallied in days. It's 5 times or 7 times the markets have rallied post the budget, and 3 times they have rallied before the budget. I mean, that doesn't make sense. I mean, those times are gone. I mean, budgets are something that you would be looking for forward to as government's balance sheet, nothing more. As far as the corporates are concerned, they already have everything in place. They had GST implementation, they had corporate tax rate cut. They have everything in. I don't think they would be asking for anything more. And their profit and earnings, we all know, they have been doing very well, and they are expected to do well going forward. So betting on the budget, I would not, really advise for that. But yes, the sectors that one has to keep in mind as the budget is being announced is infrastructure, fertilizer sector, agriculture sector, where you may have some announcement. With respect to sugar and ethanol, you might be having some announcements. Then chemical and fertilizers. We already have import barriers for most of them, but maybe something is announced for that. Overall, I mean, but not much impact would be felt on the markets as such.
Okay, understood that. Well, on that note, let's end this discussion. But the key takeaways definitely remain that no negative news is something going to be a good news for the Indian markets as far as the budget is concerned. So far, a whole lot of volatility and declines is what we've seen. A part of it has to do with the kind of long, prolonged delay in the kind of correction that we were expecting. Some part of it has come as hurdles from across the globe on concerns of inflation, the rising interest rates, and the crude oil prices. But the worst is already priced in. So you may be heading for a better set of the rally going forward as we approach the budget as well. Thanks a lot for joining in, Geetu, and sharing all your insights on the markets. Pleasure having you with us.
Always. Thank you so much.
If you like the video, do like, comment, share, and subscribe.